Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 16th of April, 2023. And yesterday we published our gold and silver weekly update, and we've placed a link below. This video is very similar to that update, and therefore if you've listened to yesterday's, there's no need to listen further. Last week we saw gold prices dip just ever so slightly, and silver prices rise. Both were headed for the moon, until the retail sales figures on Friday were announced, which, though better actually than the average expectation, still sufficiently disappointing to prevent the dollar index from rising, and therefore having a consequential negative effect on what was going to be the unstoppable rise of gold and silver. Let's look in more depth as to what happened last week. Before we look at the figures, just a quick reminder that we've set up a second channel entitled Finances Do Matter, where we are covering all aspects of finance and investment and the latest banking news. If you haven't subscribed and wish to do so, we've placed a link in the description box below, as well as in the comments section. Now, yesterday morning we produced a video entitled Gold and Silver Prices Soar Post-Easter Break, and again we put a link below. We witnessed yesterday gold touching $2,048 and silver surpassing $26. Now, we've placed links below because we want and suggest that you take a look at that video. Why? Because we stated that at the moment the markets were euphoric in the belief that the Fed will not raise rates in May due to very favourable CPI figures. However, we should wait for the retail sales figures, which were due that afternoon, to confirm whether these rises were justified. We personally felt that they were not, but had to accept that this was the current sentiment. Well, everything changed when the retail sales figures actually came out, and both gold and silver fell back. Because although retail sales for March were down 1% as opposed to 0.2% in February, suggesting the economy was slowing, the harsh reality is that traders were hoping for more, and then began to acknowledge that retail sales are not slowing enough to potentially prevent the Fed from raising rates on the 3rd of May. The result was that the dollar index rose along with treasury yields, and we saw precious metals, equities, and cryptos all falling back. Now, as someone who followed the economy and economic data closely for 40 years, I have to admit that traders were getting ahead of themselves yesterday, and Thursday especially, bearing in mind that inflation in the US, although going down at 5%, is still more than double that of its intended target, and that higher rates and more restrictive bank lending practices are needed if it is serious about reaching that 2% goal. Now, for those who wish to keep track of our annual gold and silver price forecast, which we published in January, we've placed a link to that video in the description box below. Okay, let's now actually take a look at the figures. Gold fell $3 last week, falling from $2,008 to $2,005, having hit a high of $2,048 and a low of $1,982. So that's just a very minor fall of 0.2%. In sterling terms, it finished the week at £1,616. That's down £2. And in euros, it closed at €1,824. That's down €17. Silver, though, went up. And this is now the fifth weekly consecutive rise. It rose 43 cents, from 24.98 to 25.41, having hit a high of 26.11 and a low of 24.75, a rise of 1.7%. In sterling terms, it was up 32 pence at £20.47, and in euros, it was up 0.21 euros at 23.12 euros. The result is that the gold to silver ratio fell from 80.4 to 1 to 79 to 1. Now, the difference between gold's high and low was $66, and the difference between silver's high and low was $1.36, similar to the past 4 weeks. Now, this is what we said last week concerning our forecast for this week, which has just happened. We're widening our margins slightly because we could have a bit of a roller coaster ride this week. We expect gold to trade between 1925 and 2075, which it did comfortably, to be fair, and silver to trade between 23.50 and 26, with 22.50 and 26.75 as outliers. Our thought was the upper range was more likely to be hit rather than the lower range. And silver breached that $26 normal trading range by just 11 cents, but fell back well within that range. Now, looking at other financials briefly, Bitcoin stands at $30,450. That's performed extraordinarily well this past week, up $2,514. It wasn't that long ago when it was just about $17,000. Equities were marginally higher. The Dow Jones closed at 33,886. That's up 401 points on the week, despite a fall on Friday. The S&P 500 closed at 4,137. That's up 32 points on the week. And the Nasdaq Composite closed at 12,123. And that's up 36 points on the week. Oils were higher. Brent crude closed at $86.31. That's up $1.19. And WTI crude closed at $82.52. And that's up $1.82. Unless we can actually see oil prices really fall significantly, it's going to be quite tough for inflation to come down to this 2% level. The dollar index stands at 101.55. That's down 0.54 points on the week, though it had been almost 1 point lower than this in the week. Now, as mentioned at the beginning of this video, CPI figures for March were lower than anticipated at 0.1% against expectations of 0.2%. And this propelled markets and traders' expectations. The lower producer price index also helped these figures, but although lower retail sales on Friday were okay, they burst the inflated bubble that was developing. It's also worth mentioning, though, that because gold and particularly silver had done so well of late, and especially from Wednesday of last week, paper traders in these precious metals decided by Friday to take profits ahead of the weekend, which is only natural. This may particularly be the case as this coming week there is little data to excite markets, and the only economic data coming out of the US of particular noteworthiness are the PCE figures, which are due on Friday the 28th of April. So we're looking at almost 2 weeks' time. PCE, similar to the CPI, is a measure of consumer expenditures, and thereby giving an indication of inflation to households. With this being the last critical piece of inflation data prior to May the 3rd's decision on interest rates, this will be pivotal, and therefore once again one can expect some volatility in markets. Now for gold, the key level is $2,000, with $1,960 offering significant support for now, and $2050 resistance. As stated last week, Fibonacci fans are predicting gold could indeed see $2,134 anytime soon. For silver, $26 or just above is certainly strong resistance, with numerous support points down to strong support at $24.65 and very strong psychological support at $24. So all eyes will be on Friday the 28th of April. Meanwhile, this coming week is going to arguably be relatively unexciting. Now, it is still our view that rates will rise on the 3rd of May, but this is by no means certain at this stage. So with all of this in mind, we're going to expect gold to trade somewhere between $1,950 and $2,050, with $1,900 to $2,100 as outliers, though we will be quite surprised if it does go up to $2,100, frankly. And silver we're expecting to trade between $24.50 and $26.70, with $23.75 to $27 as outliers, though once again we'll be surprised if that upper level is reached. Now before we go, just a reminder, we've placed a link in the description box below and the comment section for our Finances Do Matter channel, where amongst the 50 plus videos we've created, we've highlighted actually the difference between CPI and PCE for those interested. Let us know what you think is going to happen to gold and silver prices this coming week. Please do share your thoughts, and meanwhile give us a thumbs up, subscribe, press the bell sign, and all that remains is for us to wish you a safe, enjoyable weekend and a prosperous week ahead.